Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is Monday, February 21st. We are quickly wrapping up the second month of the year. Feels like we just had New Year's yesterday, but obviously that just goes to show you time does fly. Today we are going to cover Microsoft. A lot of red in the market today, big drop. I think we're still in a bull market. I think we still have some further decline to go. I think it was going to last a little while, and I think people are going to start waking up to that realization here over the next several weeks. The Fed's going to continue raising rates this year to try to get inflation under control. And as they do that, the market should continue that steady decline. And then once they stop raising rates and inflation starts coming down, then maybe we will bottom out and finally hit that increase. And what I like to do on days like this is start to look for value in some of the best companies out there. Microsoft is one I have been watching and just waiting for a pullback. Let's jump right in the video. So you are probably well aware of Microsoft. The particular software I'm using right now is from Microsoft, their PowerPoint software. It's part of their Words product, right? Words, PowerPoint, Excel. I mean, you've probably used some of these in the past. They have a lot of different products. Surface Pro, I have their Surface Pro myself. That's what I'm recording this on as well. And then they have the cloud services, right? Xbox games. They just provide a lot of technology and technology related. A Bing search engine, similar to Google, but their version of Google, right? The Bing search engine. So a lot of and accessories for your computer, mice, keyboards, like I said, the tablets, you name it, they provide it. If it is around computers, electronics, they probably have a service for it. I even believe they have some services for what do you call them? Software for anti-spyware or anti people trying to get into your account and stuff like that. And if you want to know more about them, check them out at www.microsoft.com. That is their homepage where I pulled this information from. Like I said, a lot of information that they have on that website as far as all the products that they provide, all the services they provide. So go ahead and check them out there. But again, I'm pretty sure you're probably well aware of them. Very large company, been around for quite a while now. Microsoft Corporation is the company we're talking about, ticker MSFT. They are out of the information technology sector. And the reason we are taking a look at them, they're down 2.09% on the day, closed out the day at $252.67. 52-week range as low as $213.43, as high as $315.95. Definitely want them closer to this $213.43. In my opinion, I think they're headed back there. Maybe not all the way back down there, but I think they're going to get close. And at 252, they are definitely, I would say maybe they're sitting closer to the 52-week low than the 52-week high, but maybe mid-range in between the two, leaning towards the low side. Average volume, 31 million. Today's volume, 26.9 million. You can see that sell-off throughout the day here, right? Looks like they started the day out as of yesterday's close at Friday, since the market wasn't open yesterday, $258.06 was the previous close. Today's open was $254, so that's where they opened up at, and obviously closed at $252. Market cap of $1.881 trillion. That's right, not billion, trillion. You heard that, with a tree, with a T, with a T like tree. So they are a very large cap company. Beta of 0.92, so they are just less volatile than the overall market. PE, price to earnings ratio, of 28.07. Now this is another one similar to Apple and a couple other companies that always seems to trade at a premium. So in my opinion, this is one, if you are going to jump into it, don't necessarily think just because it has maybe a higher PE than the overall market, it is overvalued. Obviously, if you can get it cheaper down here towards this 213, then it would bring this PE ratio down. But I don't believe it would be down in the 10, 11, 12 PE range where some of the companies I'd like to buy. If this one dropped below 24, I believe it would be a steal. Earnings per share, $9. EPS earnings per share, $9 is very nice. Earnings date, the next one is coming up April 24th to April 28th. Forward dividend is $2.72 paid out on the year. They are a quarterly payer, so divide by 4. We'll see that here in a moment. And they have a low dividend yield at 1.05, but we'll see their dividend growth here in a moment as well. So this is one that I've kind of avoided up until Well, I have not added it at all. So I've avoided it because I'm waiting to see if I can get this more towards the 1.5, 1.6 dividend yield. Obviously, back here in this 213, 214 range is where I'd like to buy it, and that would probably put it pretty close to there. Ex-dividend date was February 15th, so we've just missed that one. And the one-year target estimate, at least according to Yahoo Finance, is $286.02. Now, another site I like to look at, always recommend more than one site for information so that you can make sure you're verifying the information you are getting is accurate. I like stockanalysis.com. I am not affiliated with Yahoo Finance or stockanalysis.com. Just two sites I like to go to. You can pick whatever sites that you want. Just make sure you're looking at more than one. They have had 59 stock analysts take a look at this. They call it a consensus buy. They have a low estimate of $214.12. That would be right back up against their 52-week low, and that would be a 15.26% decrease from where it currently sits. Their average estimate is $291.57. That would be a 15.4% increase. And if it happened to hit their high of 365.4, that would be a 44.62% increase in the stock price from where it currently sits. All the while, you would be able to collect that 1+% dividend. Now, this is where I would typically show you my position. As I stated, I do not have a position in this. I am still waiting for it to pull back. I would really like it under $230 per share, and I would really like it back in that 214 range that we saw for the 52-week range or 52-week low. But the things I do like about it, it has a low payout ratio, 28.2%. The quarterly payer does pay 68 cents per share. Has very nice dividend growth at 10.43%. So if it gets back below that 230, I may start a position in this one, start nibbling as it comes down, and hopefully it gets back into that 200 in the teens range, and I could add a significant chunk of it there at that. But you pick out your buy range. That's just my opinion on this one. I do like the company. It is one I'd like to have long term. I just want it at the right value. So these are quick hitters, trying to find value in the market where we can. Like I said, big pullback on the day, a lot of red. So hopefully you can get out there. Don't be afraid to invest whenever the market's red. That's actually when you want to invest, right? Think of it as a sale in the grocery store or Walmart or Sears or wherever you shop. Whenever you go in and there's a sale, you're looking to buy things that you want to buy anyway on sale. So the market is the same way. Whenever the red happens, that's the sale. That's whenever things are starting to get cheaper. And it actually does a couple things. It decreases your cost basis. It increases your dividend yield as well as your future potential return. And it also decreases your potential risk in the stock. The cheaper the stock gets, the less risk involved with investing that. Just the opposite. Most people have the herd mentality and they want to dive into companies as they're going up, and they'll end up paying over what the company is worth. And then whenever it does fall, they're left holding the bag, right? We want to do just the opposite. We want to wait for the value, be patient, hold your money, buy whenever there's value in the market. And those red days are whenever you want to start looking for it. So as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that notification bell so you're notified whenever we post any new content. And drop a comment down below. It really does help me out. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and put it all down below, and I will respond on the day I post a video. And if I can't get to some of them that have been posted on videos previously, I will. But I am getting a lot of comments from older videos now. I do have a day job. I'm married and have kids, and they like to spend time with me too. So apologies if I don't get to your comment. It's not that I'm ignoring you. It's just that I do not have the time to answer all the comments on older videos. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week. It's a short trading week. Like I said, a lot of red. Hopefully it stays that way. I'm probably going to do my buying on either Thursday or Friday. So good luck to you in this market, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. If necessary, involves risk, you can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor. And if you've made it this long, hit that subscribe button down below. Join me on this journey to financial freedom.